do not make any trades until this specific signal appears on your chart. The signal I'm talking about is called the first pullback. Have you heard about it before? In this video, I'll explain how you can use it to minimize losses and increase profits on every trade you make. So let's not waste any time. Let's get started. What is the first pullback? The first pullback is a very predictable pattern that appears in almost every trading situation on every chart. Here's how it works. Imagine that the price is in a downtrend and then starts to reverse into an uptrend. As we know, it's extremely rare to see a perfect V-shaped reversal when a trend changes. Usually, what happens is that the price starts to reverse. At first, it makes a small pullback and then continues to rise. So this initial pullback after the reversal is what we call the first pullback. And I'm not exaggerating when I say that this pattern appears everywhere on the chart. Want some proof? Let's look at a few examples. Take a look at this 4-hour chart of Bitcoin. The price was in a downtrend and then reversed upward. Then it made a small first pullback before continuing the uptrend. Here's another chart gold. This time the price was initially in an uptrend. Then it started to gradually turn downward, but first made a small pullback before continuing its move down. Let's look at one more chart Apple stock. The price started moving down. Then it reversed upward, made a pullback, and resumed its upward movement. In fact, you can find countless similar examples on any chart. I recommend that you try it yourself after watching this video. Or you can even pause right now and check. So the main concept of this strategy is to catch the moment of the first pullback and aim to enter roughly at the end of the pullback itself. That is, the key reason for this comes down to one crucial factor: probability. Let's break this down with an example. Imagine that you notice a situation where the price was initially in a downtrend, then strong buying pressure pushes it upward. And in this situation, as a trend following trader, you might see that the trend is starting to change and consider entering a buy trade. But buying right at this level doesn't really seem like the best idea, right? Not the best move. Why? Because there is a chance that the price would pull back. And what's even worse, the uptrend could completely fail, right? If you enter at the highs, you increase the risk that your trade will end unsuccessfully. I would simply call this an unfortunate entry point. And for this very reason, waiting and entering on the first pullback is almost always the best solution in such a situation. With a pullback, you enter the trade at a moment when the price movement has a higher probability of continuing in the desired direction. And if the price continues to fall after the pullback, that's a signal that the uptrend is invalid in any case. You will have a higher probability of a successful trade because you entered in the direction of the price movement, and this is an absolutely win-win situation. In other words, you will have fewer losing trades and significantly more profitable trades if you work with the market in this way. Now let's break down how to trade using this strategy step by step. So the first step, you need to know how to identify a trend reversal. This part is absolutely crucial, and if you make a mistake, the trade simply won't work. Here's how to do it. So one of the very first things traders are taught is how to identify an uptrend and a downtrend. And it would seem, what questions could there possibly be here? Of course, we know the answer. If the price makes higher highs and higher lows, that's an uptrend. If it makes lower highs and lower lows, yes, forming such a channel, then that's a downtrend. It all seems simple, right? But here's the thing. There's a high chance that you're actually doing this incorrectly. Well, I would say not quite correctly. So imagine a chart forming higher highs and higher lows, clearly showing an uptrend, but then something interesting happens. The price starts moving down and breaks through the previous low. This is where I see most traders make mistakes. When that low is already broken, many assume that the trend has reversed. They think that we are now already in a downtrend, right? So they start defining it differently. But what if I tell you that this chart is still fundamentally bullish? Sure, the price broke the low, but that low is actually not valid. Why? Because it hasn't broken the valid low, which is actually right here at this point. And let me make this absolutely clear. What do I mean? For a low to be considered valid, the price must break previous highs after forming the low. In our example, the price actually never broke this point here, right? The previous high, which is right here. And this is exactly what it means. Yes, we can conclude that the real low is actually at this very point. So the price can do whatever it wants in this area, but as long as it stays above the actual low, it is still considered an uptrend. And this is a mistake that beginner traders often make. Now let's go even further. If the price instead moves up and breaks the previous highs, this sets a new high. It all makes sense. And in this case, the actual low shifts to the most recent low before the breakout. And for the trend to reverse, the price now has to break this new actual low. So let's look at an example on a real chart. Here we can see how the price forms higher highs and higher lows. And we can determine that the actual low is at this point because it broke the previous low after that. Later, the price moves down and this actual low is broken. This breakout confirms the reversal since the price closed below the actual low. And keep in mind, it is extremely important to wait until the candle actually closes below this point of the actual low for it to be considered a reversal. It's extremely important for us to determine whether there is a reversal at the moment or not. And once you understand how to identify a true reversal, we can move on to the next step. The step for which we are all here. This is entering on the first pullback. When we want to enter on the first pullback, we need to figure out where it could potentially form. This is important because pullbacks can form anywhere on the chart, and identifying the right area is key to determining essentially the entry point for your trade. In my experience, there is a specific area where the first pullback tends to form and bounce, and this is called the supply level and the demand level. For those who are not familiar, supply and demand levels are areas where significant buyers or sellers have placed trades. The main idea is that if the price returns to a supply or demand level, there is a high probability that it will bounce off that level. To make it easier for you to understand, it's basically similar to support and resistance levels. So if we can identify these levels on the chart, we can potentially predict where the first pullback will occur. The simplest way to identify supply and demand zones is to look at the area right before a sharp price movement. For example, if the price makes a sharp move upward, the area before the rise is called a demand level. Similarly, if the price makes a sharp move downward, the area right before this drop is called a supply level. Returning to our original example, you can notice this impulsive downward movement. And to mark the supply zone in this situation, highlight the last candle before the impulsive move occurred. Yes, meaning that sharp jump, which is right here. Use a tool, for example, a rectangle, to draw a zone from the high to the low of this candle. This marked area becomes your supply zone. Well, let's look at another example to reinforce the information. Again, the first step is to identify the trend reversal. And in this situation, we noticed that the price was in a downtrend and then started moving upward. But take a close look. In this particular movement, the price didn't give us any clear lower highs or lower lows to mark, since the drop happened in a single straight move. So how do we determine in such a situation whether to consider this movement a reversal if we don't have clear points to identify it? This is exactly where trend indicators come to the rescue. There are plenty of options to choose from, but I prefer the MACD. Basically, it's the most popular trend indicator. It's simple and reliable. After applying the MACD, we can use it to confirm whether this upward movement is truly a reversal in this situation. We can see that it crosses this line upwards at this point, and that's our signal that the reversal is valid and that we are now in an uptrend. So this serves as an alternative way to determine the trend if such a situation is not present on the chart. Now we can move on to the next step, which is to enter on the first pullback. To do this, we need to identify the demand level in this situation. In this case, we can see that the impulsive upward movement started right here. The first candlestick before the impulsive upward move is our demand zone. The next step is to open a buy trade at the highs of the demand level. After that, we simply wait for the price to follow our trading plan. In this example, the price pulls back, enters our buy entry zone, and then continues to move upward to reach our profit target. Well, basically, the main thing is that it closes higher when the entry time for our trade ends at the expiration time. All right, let me show you a concrete example on the Pocket Option platform, a good situation where you can enter a trade using this strategy, following this trade principle. On American Express, right now I can see a trend line, or rather I can draw a trend line. So we were in an uptrend and are now breaking through this low. As we've already discussed, it's no longer valid. We broke through this valid low and went lower. A trend reversal is happening. Basically, we missed the signal a bit. You could say because you can mark the area, the supply level. as I mentioned before, somewhere around this point. Let's mark it with a rectangle as well, because there was a sharp price change here. So basically, we've reached it. Here I started the video, and now we're beginning to form our pullback. Since we're on the 30-second chart, I suggest entering the trade for 3 minutes for reliability. We missed a bit of the pullback time, but overall, it's still a pretty good level. Here you can see how we basically exited this area with one large candle. So let's enter a sell trade and assume that yes, the trend reversal will continue. We'll keep moving in the direction of the downtrend, and we've pretty much entered, yes, right in this area, the area of the first pullback. Let's observe. Well, our first trade for $1,000 is coming to an end. We earned 92%. We can see how the chart reacted sharply from our supply zone height went down, even though our entry point wasn't the best. That's because while I was explaining what was happening on the chart, I missed the optimal entry a bit. In any case, the downward trend continues. We can see how the chart keeps moving in that direction, and our first trade was successful. So let me show you one more time to reinforce the result. Right now, we're on the Bitcoin OTC asset. Here, it's not immediately clear what kind of trend is happening. So let's increase our time frame to 3 minutes. And on this time frame, it will basically be clearer that we are in a downward trend. Let's demonstrate it in the same way, basically. Yes. Now we can see that this jump, yes, is basically a reversal trend. Let's switch to the 30-second time frame, the one on which we make trades. Actually, let's use the 1 minute time frame instead. It will be harder to analyze. Here we can see this jump, after which we confirmed, yes, the reversal trend. And we can also see that right now we are in an area of increased, yes, demand. This is the candle after which the impulse started, and we descended into this area. As usual, when I'm talking, the chart basically starts moving. Again, my entry point isn't quite the best. Well, in fact, from this area, yes, we're entering another trade. So here's our trend reversal to an uptrend. We open a trade following the trend. Here, let me even show it with a rectangle. Yes, a second one. Here is our first pullback. And on this first pullback from the demand zone, we already open a buy trade. We're on the 1 minute time frame, yes? And why is that? Because on the 30-second time frame, this situation is just a bit less obvious. So we've entered the trade, 2 minutes and 20 seconds left. Let's wait for the results. Well, what else is there to do? 3, 2, 1, and once again, a profitable trade. Basically, I'll repeat myself, yes. Here is our first pullback, here is our demand zone. And in general, it moved up quite sharply, though not as impulsively as in the previous example. But in any case, after the first pullback, we bounced off and are now continuing to move in the direction of our new, yes, upward trend. I think 2 trades are enough to wrap up this video. I believe you've clearly understood the principle. If you still have any questions, be sure to write them in the comments. We answer absolutely all questions. I'm always open to discussion and also happy to chat during our live streams. So if you're only watching our videos in this format, yes, just as a recorded video sequence, then be sure to join our live streams every Thursday at 8 p.m. Moscow time. Well, I think it's time to start wrapping up and summarizing this video. I've thoroughly explained the first pullback strategy. This is a strategy where we open trades in the direction of the trend. I also shared the little life hack with you, yes, which helps you more accurately identify reversal trends and not rush to define the trend when it starts to change. I also explained how to do this using trend indicators like the MACD. And of course, I demonstrated in practice how it works. And together, we made 2 out of 2 successful trades. Let's go ahead and withdraw our earnings and treat ourselves a little. So we click on withdraw. We'll withdraw basically 1,500. I've always withdrawn to USDT TRC20. This is the most convenient way. And you need to enter the PIN code. Just a second. Okay, I've received my PIN code. Of course, we'll blur this out in the video recording. We enter the PIN code, and that's it. The withdrawal request has been successfully submitted. That's where we'll wrap things up. Thank you for watching this video. Be sure to leave a like. And if you're not trading with us yet on the Pocket Option platform, I have a hot offer for you. Right now, follow the link in the description of this video. Enter the promo code you'll find there and get a 50% bonus on your first deposit. Deposit $1,000 and you'll get 500 on top. I think this is a great opportunity to start your journey in trading and on the pocket option platform. But for now, I'll see you in the next videos.